Cisco, Yamana, and Goldcorp are in the news today, and so was Detour, a big gainer on this day. Bob is in St. Thomas with a question on that company. Hi, Bob. Hi, Bob. Go ahead. Oh, did we lose him? Are you there, Bob? Go ahead.
Hi, guys. How are you doing?
Good, thanks.
Good, thank you. My question is about Detour Gold.
Yep, go ahead. Bob,
My
I think
question is about
you're getting
Detour
confused by the
Gold.
TV. Yeah, turn your TV down and ask your question, please. Okay, Detour
My
Gold.
question is about Detour Gold.
Yeah.
Okay.
As you're aware, of course, Cisco and Yamana merged today. Detour went up 10%. Would this be a good time to buy into Detour, looking for a takeover?
Right.
Sure.
Okay.
Okay, well,
I'm going to go for that one.
So, Bob, there's a couple of routes to go on this one. First of all, I would say in any case, we would probably never purchase something hoping for a takeover. I mean, it's always nice if it happens. There's optionality if you think it could happen and it's a company you'd really like to own, but certainly wouldn't go there just for a deal. I will say that our base case is that gold's 18 months ago rolled over probably for the cycle, and that while we will have these tactical rallies, they are likely to underperform for some time. So that's our base case. There was a nice little bounce over the last couple of months, which may or may not have run its course. I think last time I was on, we said we'd put a couple of positions on for a trade. We've since come out of our gold positions. So certainly, there was a little bit of pin action today. You get a deal happening. People look at the group and say, well, the group is cheap, so maybe there's other deals that could get done. And so there are a bunch of stocks that bounced. I think outside of M&A, I don't think that there are many significant catalysts right now. I think in general, the financial market crisis scenario is sort of off the table at this point. Certainly, there is no sign of any inflation anywhere except maybe a few emerging markets. So the two key drivers that you would expect to move gold higher are not there. And we did have about 6 months ago, a crossover. If you looked at gold relative to the Dow, stocks turned up versus gold for the first time in many years. It's happened about 3 times in 100 years. In each case, that signaled the beginning of a new bull market for stocks and a weak cycle for gold. So we would, in general, stay clear of gold. We have a very small amount of Franco-Nevada, and that's about it.
All right, there you go, Bob. Thanks for that. Todd's in Winnipeg. Go ahead, Todd.
So I was just wondering if Ford Motor Company is still involved with Ballard Power about developing these hydrogen-powered cars and trucks and buses and that. I know they invested a lot of money several years ago, and then I haven't heard anything more about it for a long time.
Okay, thank you.
Todd, I have to be honest, I haven't spent a lot of time looking at that. A lot of the car companies have made investments in various technologies, some of which have come along, some of which have not. So I have to tell you, I haven't taken a close look at that recently. We do like the auto industry in general. We prefer the suppliers to the manufacturers. Right now, the units are going up as far as sales. We're ramping towards sort of 16 million cars. But we prefer the parts companies versus the manufacturers.
You're in Magna?
We're in Magna and we're in Linamar.
And Linamar, both at all-time highs today.
Yeah.
Roman is in Maple, Ontario. Hi there. Oh, sorry, Ramil. Go ahead. All right.
I'm holding in my RRSP, AT&D, Verizon, BC, and Vodafone was there. Now, Vodafone, they have split some share, and I got 26 Verizon shares, and I want to sell that Verizon sales and buy the balance like 46 shares to make it Vodafone 100. Or I can do that FEZ, European ETF or VGK. What is your idea? Whether I should buy Vodafone 46 shares or I should sell Vodafone totally and go to the European ETF, FEZ or VGK since I have already AT&T, Verizon and BC.
Right.
Thanks.
Right.
Bye.
You follow that?
So Romo, let me say first off, we're in a very interesting market because over the last 14 months, the correlations stock to stock, or the degree to which shares are all behaving the same, has been coming down. So there definitely are haves and have-nots. Some sectors doing particularly well, some sectors not doing as well. I would say off the top, the telecom sector is probably not the first one to focus in. people have been moving exposure to things that are slightly more economically sensitive and where you might get some benefit if the economic data starts to pick up as it looks like it is. So first off, telecom would not be my favorite space. Second, you are in a process with Vodafone where you've got some noise in the market with this spin out, and so there will be some shares for sale in the market which could put a lid on things for a little while. So there's two strikes against it. Now your second question was, should I go maybe to Europe? I would say if we look globally where money is getting put to work, and we define that as where is their expanding breadth, where is it that more and more companies are performing well, the US is our number one market. Second and behind that would be the major markets in Europe. So the European recovery is coming along slowly, but we do see very good performance in some of the major markets in Europe. And we do have some European exposure, and ETF is a great way to do it. You could do it with EZU, which gets you the EMU countries, or you could do it country by country, like Italy, which is EWI, or Spain, EWP. So I would suggest that. I think it sounds like you got a lot of telecom exposure to begin with, and I think that should be a smallish part of the portfolio right now.
Okay, let's look at the one that Ramil suggested, VGK, which is a Vanguard. It's a broad ETF. Yeah. Just as good as with the ones you mentioned? Or?
Yeah, these things are basically hitting highs for the year. Mm-hmm. And I think it's very possible, given the inflation data that's been coming out of Europe, that you could see additional easing from the central banks there, which would be a positive for the financials and a positive for the markets themselves. So I think that they're performing very well. Their bond markets continue to get better. I think it's an important place to have some exposure.
Let's take a break here with David, and we'll come back with his past picks after this.